Okay guys, today a different video. I want to answer a question that I've been asked and discuss this problem with you. And the question is, can Bitcoin hit 200k by the end of the year? But then came the washout. Bitcoin tanked, crashing all the way below 110k. But now, here in 2025, we've got less than 100 days. Does Bitcoin still have a chance? You know, the Bitcoin market has been very volatile lately. Price swings keeps countless investors excited for what's to come. And from a technical perspective, yes, we saw a golden cross. This signal has finally appeared, suggesting potential upside in the short term. And sure, this year we've heard a ton from big institutions, right? Bitwise, Standard Chartered, Bernstein, and guys like Arthur Hayes, Tim Draper. They have been all saying it. Bitcoin could hit 180k, 200k by year end, or even higher. But hold up, if Bitcoin is gonna charge towards that 200k mark, with its current market cap around 2.5 trillion. Hitting 200k means the total cap needs to grow by another 1.5 trillion. Sure, market cap growth isn't exactly the same as straight cash inflows, but it still needs a massive wave of liquidity to fuel it. What does that mean in real terms? Even with Wall Street ETFs and potential policy boosts, that's still an astronomical figure. It would take an epic macro narrative to drive it. But honestly, based on the on-chain data and market sentiment I've been watching lately, seeing that kind of catalyst pop up short term, just like that, it's gonna be super tough. Because, first off, the market is facing huge selling pressure. At this exact moment, I checked the recent on-chain data. In this cycle, some long-term holders have sold off about 3.4 million bitcoins. They are looking in profits. 3.4 million bitcoins at current prices, that's around 380 billions. So this isn't some small sell-off. It's a relentless, massive wave of selling power that's been unloading tons of Bitcoin into the market. Think about it. Any new buying power has now two things to do. First, absorb all that 400 billion in selling, just to keep the price steady, no drops. And then secondly, on top of that, pump in even more massive funds to push the price up that 67% we talked about. So it's not one force needed, it's two. When to fill the hole, when to drive the surge. And from the data now, even the hole filling power isn't showing up yet, let alone the surge. ETF data backs this up too. You've maybe seen it in that last week of September. Bitcoin spot ETF saw net outflows of over 900 million. So sure, last week was the other way around. But that's exactly the point. We have to get this. ETFs are a double-edged sword. When money flows in, they boost the price. But when sentiment shifts and money flows out, they have to sell Bitcoin on the market to meet redemptions too. That's just an amplification of the downside pressure. And the third engine, corporate Bitcoin's buying, has slowed way down too. The trend is cooling off. Data shows corporate purchases are down 76% from the July peak. All three engines slowing at once. What's the fallout? The market structure gets really frail. We saw it in the most recent price pullback. It triggered nearly 1.7 billion in leverage positions getting liquidated. One of the biggest liquidation events this year. So when the foundation is shaky and momentum is weak, even normal fluctuations can spark chain reactions, leading to sharper drops, sharper than what we expected. So, okay, that's what you can see inside the internal market stuff inside the crypto market, Bitcoin market. But now, let's look at the macro signals. Are they good? Maybe they could help. No? Things are complicated there too. On the surface, we did get some good news lately. The Fed, the world's big liquidity trap, they finally cut rates in September. A lot of people hear that and get excited. Rate cuts mean more money flowing, right? More liquidity lifts all boats. Bitcoin should rise. In theory, yes, but you gotta ask one more question. Why are they cutting rates? It's not because the economy is killing it and they want to celebrate. It's just the opposite. Powell called this a risk management cut aimed at handling signs of weaknesses in the US labor market. If economic data worsens faster than the cut stimulus kicks in, the market's focus could shift from liquidity boost, so good news, to recession risk, so bad news. Right now, America is in a big mess. The government's been shut down for a week already. Republican lawmakers are blocking Democrat bills. Most Democrats are resisting Republican ones. Nobody is budging. As a result, nearly half the government workforce, about 34,000 people I think, are on suspension. What does that bring to the market? Chaos and massive uncertainty. Goldman Sachs warned that with the shutdown, this month's non-farm payrolls data might not even come out. No data means what? It means the Fed loses its bearing for decisions. Their planned October rate cut, it might get delayed because they don't have the data. So you see, the situation is more even more tangled. Markets were counting on that tap keeping the water flowing. Rate cuts. But now, the folks controlling the tap are fighting among themselves. Not a good sign for markets. And it's not just the US. The IMF, the World Bank, their reports say global growth in 2025 will stay sluggish too. And in trade issues, policy uncertainty, and all sorts of geopolitical conflicts. All these factors together show the big picture environment is full of challenges. So stringing all these signals together, the challenges are real. So when we get back to the initial question, Bitcoin, does that mean 200k is totally impossible? Let's look back at last year, that big rally we got in 2024. The core driver was what? A fresh, powerful narrative everyone bought into. Bitcoin could become part of sovereign nations' strategic reserves. That story's imagination overpowered all the weak data and pushed Bitcoin to new heights. So the real issue now is whether in the 80 days left this year, the market can create a new narrative as compelling as the National Strategic Reserve one. Here is what I think about that. A great narrative needs time to brew, to ferment. Then it needs time to get believed in and priced in by the market. Cramming that into 80 days, I think, is too tough. So yeah, it happened last year, but this year, I haven't seen even the shadow of a narrative that could get everyone buzzing. Stablecoins are kind of one, but it's not enough. But on a good note, we've got to see the other side, the deeper one. Even with all this pressure that I'm talking about, Bitcoin's price hasn't cratered yet. Support is still strong at 100k. It's rock solid, I think. And I think that's because the force holding it up comes from those who see Bitcoin's unique role in this era. We worry about the Fed, government shutdowns. Those are all human systems full of uncertainty, political games. Rate cuts today, flip-flop tomorrow. But Bitcoin offers the total opposite. Absolute certainty. Store of value. Its monetary policy is coded in 21 million forever. A mathematical promise no one can mess with. The world today is full of conflicts and divisions. Trade wars, tariffs, geopolitical clashes. Wars. Real wars. Weaponization of the dollar. And so on. In that environment, a global asset not tied to any country, uncontrolled by any political entity, it has a value, a real value, and its strategic value shines. So, this strong support is a rational market choice, I think, and it will stay rock solid. It's a tool to hedge uncertainty. So my thoughts are, if the market doesn't give us enough surprises, 200k looks really hard right now. That's sure. We need something more. And most importantly, there are those signals we talked about. We have to see when that nearly 400 billion sell-off will get truly absorbed by the market. We have to see when ETF flows will turn around and start pouring in steadily again. And the most important, we have to see if that new story, that new narrative we are all waiting for emerges on the market or not. Until those signals clear up, any bold moves are just gambling. Of course, that's just my personal take, and that's why I think we will not make it. So that's not investment advice either. And if you've got a different view, drop it in the comments or add me on Telegram through the link in the description to chat directly with me. And remember to subscribe. I'm Cédric, and I'll catch you in the next one. What do you think about that? Tell me.